Let's now look at beginning of your business. Let's start with some sobering facts from the Small Business Administration. Small businesses are responsible for 58% of the private workforce, 40% of the gross national products, and they get credit for more innovations and inventions of their products versus their bigger business counterparts. Women-owned businesses generate $65 billion each year, and 78% of all small businesses have 10 employees or less. Sadly, only 50% of businesses survive the first year of operation, and 80 to 90% fail by the end of their 10th year. Now, new to business, let's look what's really important. First, you need to build a power team. Again, servicing over 2,400 customers, I've had the pleasure, and also not only that, but also owning several of my own companies, I've had the pleasure of learning from people that do things this way versus doing it the hard way. I unfortunately started most of my businesses early on, some of them over 20 years ago, and I learned the hard way because I didn't have somebody like myself teaching me exactly what I should be doing up front. So the first thing is to have accountants and have at least 2 conversations with your accountant. And this should be annually. This isn't just starting your business, but you should have these conversations annually with your CPA. There shouldn't be this private door where you hand your financials and they close the door and then they pop out a tax return. You should really have these, make sure your accountant knows your business, knows what's happened in that year in your business. So the first one should be more of a tax planning. It should be at least 3 months before the end of the year. And of course, this is after you've already started your business. So we're talking about an ongoing maintenance. So 3 months before the end of the year, it gives you enough time to discuss where you've been the first three quarters and where you're going to go the last quarter. If you are going to have a tax obligation, you certainly want your CPA to give you some advice on maybe how you can lessen your tax obligation, or if you're having some financial struggles, maybe they can help you retool your balance sheet to maybe help you going forward. The second should be before your accountant prepares your return. You want to make sure, again, you discuss anything in your the current the tax return that they're going to be preparing. If you've had any theft, if you've had any loss of any kind, you just really want to make sure that, or if you've purchased any assets, you really have to make sure that they are preparing your tax return correctly. The second that you should consider on your power team is an attorney. Attorneys, first of all, consider the type of business you're in. If you have products, as an example, you want to make sure that you have contracts for your employees. Maybe you have a no-compete, no solicitation, a privacy-type contract. And just in general, maybe you need to have some, even if you're hiring outside consultants, you want to have some kind of privacy agreement. So really having an attorney to make those agreements and really look out for you in a business, make sure it's a business attorney, that'll help you in the future, hopefully prevent some pitfalls. And you can have them on a retainer, maybe a light retainer, but still a retainer, to where if something does come up, you can quickly make a phone call to them and you already have a relationship with your attorney. And again, do you need employee contracts? Do you need any kind of customer contracts? And again, that falls under the attorney. Now you have the business consultant. I am a type of business consultant. We do more than just business consulting, but there are a lot of business consultants. There's business coaches out there, some really, really good business coaches. So I would encourage you to consider putting money aside in your budget to have all 3 of these as really a power team within your organization, especially if you are not an expert at all of these, which typically business owners are not experts, which is why there's other experts out in that field that can help them. Now, a business consultant can help you fill in with the pitfalls that are not typically provided by a CPA or an attorney, and they're usually more affordable on an interim basis than a CPA and an attorney. I often tell my clients that I'm the person that reads, that kind of translates between what they're saying and what a business owner understands, because a lot of business owners are not experts in those other fields. They're experts in what they're going into business for, which is why they need kind of an interpreter between the two to understand, kind of translate the CPA verbiage over into a business side. Some common business mistakes that business owners make. The first is not being involved. Now, there are some business owners that have created such a great internal power team where they don't have to be as involved, But I meet with customers all the time that are not quite involved in their company, and they think it's on autopilot, and that doesn't always work. So just try and make sure that you're involved and that your staff know that you know what's going on within your organization. Next is not hiring the right team. Back again, when I started my first companies, hiring the right team, I thought I knew what I was doing, and clearly found out over time, especially this current business, it's going on 17 years old, I found out over time that, the people that you originally have start with you aren't probably going to be there ultimately in the end. So, you have to learn how to be prepared to, let employees go and have new ones come in, and that's just the evolution of a business. Not planning for the right marketing or funding. I see a lot of businesses that maybe they budget $150,000 to open a store, get product in, and then here they have a store and they have product, but they've done no marketing and advertising because they didn't think about that. So it's really important that you make sure that you have funding available going into your business that you can tap into and get all the right resources. Next is knowing your target market. Who is your customer, and how are you going to get to them? Again, you can, in a retail environment, you can build out a store, you can buy all your product, but then how are you going to get out to those people? Who are your customers? Are they business-to-business customer? Are they an end consumer? So you really have to know how to reach out to them. You have to have the right location for your business. Certainly, even retail, certainly there's better places for what you're going to sell versus other places. And you can kind of, if it's a retail location you're looking for, scout out the area. Make sure that the economy in that area is going to supplement your product. Are they going to buy your product? Do they have the right means to buy your product? You certainly wouldn't put a high-end retail in an area that doesn't get high-end people buying from you. If you're in an office environment, say it's a professional environment, are the people around you, are they kind of cohesive with what you're doing? Maybe there can be some kind of referrals. But if you're in an area where there's absolutely no way that anybody around you relates to your business, it may not be the right business for you. It might be cheap rent, but it may not be the best for your overall business growth. Do you have a good accounting of your business financials? Although this is more of we're not going into accounting software, there are other accounting materials through this organization that you can look at for accounting software. There's a couple different, primary ones to choose from for startup. I'm partial to QuickBooks because that's what we provide service for and sales for. But, ultimately there are a couple smaller software out there that, that can help you get going. But it's really important that you do know exactly what your accounting is and make sure that it's accurate. If you don't have a good business plan, that is something that I see a lot. Again, you have somebody that has a great idea. They want to go out there and market it, but they didn't really think about the steps. And we'll go into a business plan in a little bit, but they didn't really think about all the steps of what they need to do to get their product or service out there successfully. And then not be knowledgeable of your business and not having a passion for it. I do find that there are a lot of business owners, they'll go buy a business and they'll develop a passion for it. But ultimately, if you're starting a business that you're buying and you don't really have the passion for it, reconsider something that you do have a passion for. Certainly, I couldn't imagine 17 years ago doing what I'm doing now and really still loving it, and I do. So I found the right business for me. I enjoy what I do, and I can't imagine doing anything else. So that's really when you can make something really successful, is when you do have that passion and drive. Now let's look at registering your business. Many businesses are required to register with your own state. There are some, actually quite a bit of companies that register in the state of Delaware. But most register within their own state. And you have to look in your own state to see if there's any kind of online enrollment. And you can always look online to see if there's any kind of, you can Google your state or Yahoo your state, whichever you look for, and see if they do have online enrollment. Or usually they have a link for you to fill out a paper enrollment. And you also have to know when your renewal is. So once you register for your company, and I'm talking about, I'm kind of eliminating the sole proprietorship in my conversation because I usually recommend having at least a partnership going up into your corporations. So within your own state, you have to make sure you register the correct entity type. Again, knowing when your renewal is very important. I had a customer who has renewed, they've been in business since 2005, and they renewed every year, and they missed the renewal for this last year in their state, and they ended up having to not only pay the $450 renewal fee, but then they got a $500 penalty because they didn't renew in time. So you have to know when your state renewal is, because sometimes they'll send out a postcard, sometimes they send an email, but really you have to make sure that you remember that. That's one of your responsibilities as a business owner to make sure that that happens. Next, many states have fictitious name registry, and you definitely want to register your name under their fictitious name registry, and you also want to make sure before you even name your business that there is not currently a name in your state with that same business, and that there's not a fictitious registered name already of that same name, because it can be declined. So do that research before you come up with a name and have everything logoed and branded. Make sure that it is available in your state. Most 3 states, again, require you to pay an annual renewal for the fee. Just make sure that you do that in time. Next is getting your EIN. Once you've validated your company through your state, you want to make sure that you get your EIN. You can apply for an employer identification number through the IRS, and here's the website that you can go to. And I'll go ahead and click on that because it's an actual online registration. So we'll go ahead and launch it from here, just so you can get familiar with the IRS website. And there's a lot of valuable information, not only through the SBA website and that Small Business Association website, but also through the IRS website. So let's actually let this pull up. Let me close that one. So here's your EIN assistance page. And you can see at the top here, apply for a new EIN. So every business in the United States would apply for an EIN. Okay, so you can begin the application. And again, it's an online application. You have to make sure, just be very sure that you make sure all the spelling is right, because trying to get anything redone through them can sometimes be a little bit of a delay. So just make sure to verify everything through this application before you actually do the final submit. If you want to be considered an S corporation, you have to be sure to additionally complete Form 2553, which is also, you can also Google, Form 2553. Since the last one took a little bit longer to load, I'll let you just Google that. And it's an IRS, again, it's an IRS form. It's a very simple form. It asks you for the date you're incorporated, what your EIN is, and that will convert you from a C corporation to the S corporation. It's really your election to be an S corporation. There also is usually a local IRS office not far from you. I recommend that if you have any questions, you can contact them directly, or again, you can contact a CPA and attorney. And if you can find a CPA that also is an attorney, that's great. That's even better. Last but not least is your business plan. So what's in a business plan? A summary it's more like a table of contents. There's really 7 components, and the table of contents or the summary can be done after you get done with doing your business plan. You have a company description, which is your legal establishment, what's your history, your startup plans, etc. You have products and services. You have to describe what it is that you're selling, whether it's a product or service. Your market analysis, you need to know your market, what your customer needs are, where they are, and how to reach them. You have to have an implementation and strategy. Who will be doing what in your company, the budget to get it done, and the budget to keep it going. You have to have a management team, include backgrounds of key members in your team, personal strategy, and details. Last but not least, your financial plan includes the profit and loss, your cash flow, your balance sheet, your break-even analysis, assumption, and business ratios. Now, what's important also about a business plan is that you not only have it to start with, but you continue to review it frequently. Your business plan most likely will change. Just to share just a really brief story, my business didn't start off 17 years ago as doing what I'm doing now. My business plan evolved over the past, really over the first 5 or 6 years, it evolved, and I was willing to make that change. So just because you start your business as doing one thing doesn't mean you can't evolve it into something different, but it does take reviewing that. That concludes beginning your business.